There are moments in history when technology doesn't just improve life, it completely rewrites the rules of wealth, power, and opportunity. The internet did it. Smartphones did it. Artificial intelligence is doing it right now. But quietly, behind the scenes, something even bigger is taking shape, something that could dwarf them all. Quantum computing is no longer just a theory locked inside physics labs. It is rapidly evolving into a real-world industry with billions of dollars flowing into it. And just like every major tech revolution before it, the early movers are positioning themselves for massive upside. Think about this. The biggest fortunes are rarely made when something becomes obvious. They are made when something still feels uncertain, complex, and misunderstood. That is exactly where quantum computing stands today. To understand why this matters, you need to recognize how early we still are. Most people don't even know what quantum computing actually is. To them, it sounds like science fiction, something futuristic, complicated, and far away. But that's precisely why the opportunity exists. When personal computers first emerged, very few people understood their potential. When the internet was born, most dismissed it as a niche tool. Even when smartphones launched, many thought they were unnecessary luxuries. Yet each of these technologies created trillion-dollar industries and life-changing wealth for early investors. Quantum computing is following a similar pattern, but with even higher stakes. At its core, quantum computing represents a completely different way of processing information. Traditional computers operate using bit-simple units that can either be a 0 or a 1. Everything you see on your phone or laptop is built on this binary system. Quantum computers, on the other hand, use qubits, and qubits behave in ways that defy everyday logic. They can exist in multiple states at once, a concept known as superposition. Even more fascinating, qubits can become entangled, meaning the state of one qubit is directly connected to another, no matter the distance between them. This allows quantum computers to process massive amounts of possibilities simultaneously instead of one at a time. The result, problems that would take classical computers thousands of years could potentially be solved in minutes. Now, that kind of power isn't just impressive, it's disruptive. Entire industries could be transformed. Drug discovery could accelerate at unimaginable speeds, allowing scientists to simulate molecules perfectly before ever stepping into a lab. Financial systems could optimize trading strategies and risk calculations in real time. Logistics companies could solve global routing problems instantly, saving billions in costs. Even cybersecurity, as we know it, could be turned upside down, as quantum computers may one day break current encryption systems. This is not a small upgrade, it is a fundamental leap forward. But here's the catch: building a quantum computer is incredibly difficult. Qubits are extremely fragile. The slightest disturbance, heat, vibration, even electromagnetic noise can cause them to lose their quantum state, a problem known as decoherence. This is why quantum computers often operate at temperatures close to absolute zero, colder than outer space. Engineers and scientists are racing to stabilize these systems, reduce errors, and scale up the number of qubits. And while challenges remain, recent breakthroughs suggest that we are closer than ever to overcoming them. This is where the story becomes even more interesting, because the biggest players in technology are starting to take quantum seriously. Companies like Nvidia are not necessarily building quantum computers themselves, but they are laying the foundation for a hybrid future. Instead of replacing classical computers, quantum systems will work alongside them. GPUs will handle certain tasks, while quantum processors tackle others. This combination, known as hybrid computing, could become the standard model for the next generation of technology. At the same time, specialized companies are emerging as leaders in the quantum race. IonQ is focusing on trapped ion technology, which uses charged atoms controlled by lasers to create highly stable qubits. Rigetti Computing is developing superconducting systems that operate at extremely low temperatures and aim for faster processing speeds. Meanwhile, D-Wave Systems has taken a slightly different approach, focusing on quantum annealing, a method designed specifically for solving optimization problems. Each of these approaches has its strengths and weaknesses. Trapped ion systems tend to have higher accuracy, but are slower. Superconducting systems are faster, but struggle with errors. Quantum annealing is already being used commercially, but is more specialized in its applications. This diversity is important because it means the industry hasn't settled on a single winner yet, and whenever that happens, it creates opportunity. Multiple companies can succeed, and early investors can benefit from the overall growth of the sector rather than betting everything on one outcome. What makes this moment truly unique is the convergence of three forces: technological breakthroughs, increasing investment, and growing real-world applications. Governments are pouring billions into quantum research because they understand its strategic importance. Corporations are partnering with quantum companies to explore use cases, and startups are pushing innovation at a rapid pace. This is exactly what you see at the beginning of every major technological shift. However, it's important to stay grounded. Quantum computing is not a guaranteed path to instant profits. Many of these companies are still in early stages, with limited revenue and ongoing losses. The technology is promising, but it is not yet fully mature. That means volatility is inevitable. Prices can swing wildly based on news, breakthroughs, or even speculation. This is not a space for short-term thinking. It requires patience, research, and a long-term mindset. The real question isn't whether quantum computing will matter, it's how big it will become and who will benefit the most. Because if history has taught us anything, it's that the biggest rewards go to those who recognize the shift early and position themselves before the crowd arrives. Right now, quantum computing is still in that early phase. It's complex, it's uncertain, and it's misunderstood. And that's exactly what makes it so powerful. Let's start with one of the most talked about players in the space, IonQ. What sets IonQ apart is its focus on trapped ion technology, which many experts believe offers one of the most stable and scalable paths forward. Stability matters because quantum systems are incredibly sensitive, and reducing errors is one of the biggest hurdles in the industry. IonQ's approach allows for a high-quality qubits, which could translate into more reliable computations. The company has also been aggressive in forming partnerships and expanding its reach, making its technology available through major cloud platforms. This is a key point. Accessibility drives adoption, and adoption drives growth. However, IonQ is not without risk. Like many early-stage tech companies, it is still operating at a loss. Revenue is growing, but profitability is not yet in sight. This creates a classic high-risk, high-reward scenario. If the company succeeds in scaling its technology and capturing market share, the upside could be significant. But if progress slows or competitors leap ahead, the downside is equally real. Next, we have Rigetti Computing, a company that represents a different philosophy. Rigetti is focused on superconducting qubits, which are known for their speed. In theory, faster systems could handle more complex calculations in less time, but speed comes with trade-offs, particularly in terms of error rates. Rigetti is working to overcome these challenges while also integrating its systems into a hybrid computing model. This is where companies like Nvidia come into play again. By combining classical and quantum systems, Rigetti is positioning itself for a future where both technologies coexist and complement each other. From an investment perspective, Rigetti is often seen as a long-term bet. Its current revenue is relatively small, but it has been building infrastructure and partnerships that could pay off over time. The key question is whether it can execute its vision before running out of resources or being overtaken by competitors. In a fast-moving industry like this, timing is everything. Then there is D-Wave Systems, which stands out for a completely different reason. It is already generating commercial revenue. D-Wave's focus on quantum annealing allows it to solve specific types of problems, particularly in optimization. This makes it highly useful for industries like logistics, manufacturing, and transportation. Companies and organizations are already using its systems to improve efficiency and reduce costs. That real-world adoption is a major advantage because it demonstrates practical value, not just theoretical potential. But D-Wave also faces limitations. Its technology is more specialized, meaning it may not be as versatile as other quantum systems in the long run. To address this, the company has been expanding into gate-based quantum computing, which could broaden its capabilities. This dual approach, combining current revenue with future potential, makes D-Wave an interesting hybrid play. So how do you decide which of these companies to invest in? The answer depends on your strategy. If you are looking for a high growth and are willing to accept volatility, IonQ might stand out. If you believe in the hybrid computing future and want exposure to that model, Rigetti could be worth considering. And if you prefer a company with existing customers and a more established commercial presence, D-Wave offers a different kind of appeal. Another approach is diversification. Instead of trying to pick a single winner, you spread your investment across multiple companies. This reduces risk while still allowing you to benefit from the overall growth of the industry. It's a strategy often used in emerging sectors where uncertainty is high but potential is massive. Because the truth is, no one knows exactly how the quantum race will play out. Different technologies could dominate different use cases, and multiple companies could succeed simultaneously. Beyond individual companies, it's also important to look at the bigger picture. Quantum computing is not developing in isolation. It is part of a broader technological ecosystem that includes artificial intelligence, cloud computing, and advanced hardware. These fields are increasingly interconnected, and progress in one often accelerates progress in another. For example, AI can help optimize quantum algorithms, while quantum computing can enhance AI capabilities. This kind of synergy amplifies the overall impact of the technology. Timing is another crucial factor. Many investors struggle with this because they either enter too early and lose patience or enter too late and miss the biggest gains. Quantum computing requires a long-term mindset. This is not a get-rich-quick scenario, it is a position yourself early and wait scenario. The companies leading today aim to be the same ones leading 10 years from now, but the industry itself is likely to grow significantly, and that growth is where the opportunity lies. Finally, there is one principle that remains constant across every technological revolution. The best investment is not just in companies, but in understanding. The more you learn about quantum computing, the better your decisions will be. Knowledge reduces risk. It allows you to see through hype, identify real progress, and stay confident during volatility, because there will be ups and downs. There always are in emerging industries. Quantum computing is moving from theory to reality. It is no longer just a concept discussed in academic papers. It is becoming an investable space with real companies, real products, and real potential. The question is not whether it will impact the future, it's how prepared you will be when it does. Because when the shift becomes obvious, the biggest opportunities are usually already gone. And that's the difference between watching a revolution happen and being part of it. Disclaimer: this video is for educational and informational purposes only and does not constitute financial advice. Investing in companies like IonQ, Rigetti Computing, or D-Wave Systems involves risk, and you should always do your own research or consult a qualified financial advisor before making any investment decisions.